On to 6.4, which is our 920 presentation by RCRC and Golden State Finance Authority on Assist to Own program available to county employees. Susan, did you want to? I don't know if they're online. Okay.
I see Carolyn from...
Oh, there's Carolyn. There's Carolyn.
And she's already been upgraded to the panel.
All right, and so what I'll do is I'll give an overview. I wanted to bring this forward. They are doing, I know that the county is working in collaboration with Golden State Finance. This is a program that the Golden State Finance has in their JPA that we're a part of through RCRC. And so we've sent some documentation and flyers over to the county so that we can work together with Golden State Finance for Assist to Own programs that we are able to work with Golden State Finance on. And so they're going to go into the details. This is for county employees, of course, but I just wanted to ensure that the specifics were ironed out and people have a chance to see this program. And then when there's I think it's a session that they'll have later on for the employees to come look at and talk about in a more in-depth discussion, they can do so. So with that, Carolyn, if you're available, there, I see you right there. So I'll go ahead and give the floor to you. So far, we're not hearing you. I don't know if...
She looks like she's still muted.
I think you're muted.
Good morning,
there
supervisors.
We go. All right.
Thank you all for inviting me to do this presentation this morning and to share some exciting information about a financial assistance program that's designed to help individuals that are employed by County of Lake to purchase a home anywhere in California. My name is Carolyn Sanseri, and I'm the marketing director here at Golden State Finance Authority. Golden State Finance Authority, or also known as GSFA, is a California public agency. We're a joint powers authority that was formed by rural county representatives of California about 29 years ago. The JPA consists of 38 member counties, one of which is County of Lake. Each member county has a board of supervisor that sits on our board of directors. So Supervisor Eddie Crandall, I want to thank you for your role on our board and being a part of making this program called the Assist to Own program possible today for the employees of County of Lake. The primary mission of Golden State Finance Authority is to support affordable housing in California and to contribute to the economic well-being of our constituents, of the residents. And to date, we've been able to help over 84,000 people to purchase a home in California. And the vast majority of the time, that is through the provision of down payment and closing cost assistance, of which we've provided over $647 million to California residents. Year after year, we have seen studies that talk about the impact, the positive impacts that home ownership have had on families, on communities, and to the economy as a whole. When you look at a study from National Association of Realtors, they repeat every time they do this study that home ownership can improve the stability of neighborhoods because as people become homeowners, they ground there in the community. They become more involved in civic engagement. They, their children are in schools and it increases their educational achievement and their own, feelings about the schools and what is needed for their families. It improves physical and psychological health of families. And there's a correlation as home ownership rises, there's a correlation that crime also is reduced. In addition, they're involved in the community and their money is going into the economy of the local community, strengthening it. But I'd like to take it a step further and talk about how home ownership can actually impact people on a personal basis, their financial situation for the future, their financial security. The Federal Reserve has estimated that the median net worth of a homeowner is over 40 times that of someone who doesn't own a property. And that's a lot of difference in their own financial wealth. The difference between $255,000 as a median net worth for a homeowner versus $6,300 for someone who doesn't own a home. So today what I'm going to talk about is this new program that we've been providing for a couple of months now. It's called the Assist to Own program, County of Lake Assist to Own program. I can cover an overview of the program today, but complete program guidelines, loan applications, interest rates, and annual percentage rates are all available through our participating lenders. We have over 200 lenders that are offering this program throughout California. And here in Lake County, you can look up the lenders that have branch locations nearby or that are approved on our website at gsfahome.org. The program provides down payment and closing cost assistance to employees that work for County of Lake. It's for the purchase or refinance of a primary residence, so it's a home that they're going to be moving into or living in as their primary resident. It can be a 1 to 4 unit property, however, a townhome, a condominium, and even in some cases, manufactured homes. The program guidelines themselves are very flexible. Our goal here is to give more access to home ownership to California residents and residents of County of Lake. So we don't have a first-time home buyer requirement, for example. So whether you've owned a home in the past or maybe you even currently own a home, if you are purchasing a home that you'll be moving into as a primary residence, you can qualify for the down payment and closing cost assistance of Lake County Assist to Own. The employees can use the program with government loans such as FHA, VA, USDA mortgages, or even with conventional financing. All of our loans are 30-year fixed rate loans, and we do have a maximum loan amount of $647,200. Employees also don't have to have perfect credit to apply. We have FICO scores allowed as low as 640 and debt to income ratios as high as 50%. There are no income limits at all if someone is utilizing the FHA or VA mortgage product. If they're using a USDA property financing, which can apply in a lot of Lake County, the income limits for that property are going to be listed on the USDA website, and we do follow those guidelines. The income limits for conventional loans, however, we do set, and those are published on our website, gsfahome.org, but they're actually quite high. They're low and moderate income, and it's only based on the income of the person that's qualifying for the mortgage loan, so the person that's on the loan application, whether that's one or more people. As you can see on the screen, I put some examples up of what those income limits look like if they are going with conventional financing. In Lake, Tehama, Butte, Colusa, Mendocino, those are kind of the counties that are nearby Lake. If they're purchasing in any of these counties, the income limit for conventional loan financing is $182,880. So definitely in the moderate income. You can still qualify with conventional financing. No income limits at all on FHA and VA loans. Now let's look at the actual down payment assistance that's being provided, because that's what we are here for. The assistance is up to 5.5% of your first mortgage. The first 3.5% of that assistance is provided as a deferred second mortgage. What that means is that it's a loan, it's a second loan, and it does have to be paid back to GSFA when the borrower refinances, sells the property, or at the end of the mortgage loan term, the end of 30 years. However, it's a deferred second mortgage, which means there's no monthly payments along the way. It has a 0% note rate associated with it, meaning that it's not accruing any interest. So the amount that is provided in assistance, 3.5% of the loan, the first mortgage, that's all that has to be paid back when they sell, refinance, or at the end of 30 years. The second piece of assistance is an additional 2%. And so a lot of times people need more than just help with their down payment assistance. So we've built a feature into the program to give them an additional 2% if they need it. And that is provided as a gift, but it does fluctuate the interest rate on the first mortgage in order to qualify for that gift fund. So the primary assistance is that first 3.5%. And is that enough for down payment? It is. On a conventional loan, only 3% is required for down. And so here on the screen, you have an example of a $400,000 sales price. If they were going with an FHA loan, it's about 3.5% that is required down. And so the first mortgage would end up being $386,000. They would need to come up with $14,000 for the down. We would provide them 3.5% or $13,510, which is pretty close to covering all of the down. If they went with conventional financing, it would cover all of the down payment requirement. And of course, there's that additional 2% that they can access to help with closing costs as well. The down payment assistance is really a tool to just help individuals and families to purchase a home sooner than if they were trying to save up that money on their own. We know in California that housing costs are a big portion of our income every month, and it's getting harder and harder for people to put money away in savings. And so our goal is to help people access assistance to get into homeownership today, to start building their financial security today. Home prices are continuing to rise, even if it's at a slower pace than we've seen in the last 2 years. It's still expected that home prices will rise 5 to 8% in the next year. And we know that rents are continuing to rise. And interest rates also, although they're still at historic lows, they have been increasing this last year. So with that in mind, consider how long it would take you to come up with that money for the down payment. In the example we used, it was $13,510 that they were getting for an FHA loan. So consider at $300 a month, how long would that take you to save up that same amount of money? $300 a month, it's 45 months or almost 4 years. So if you're predicted to see home prices rise at 5% a year, in 3.75 years, that's $75,000. So that's equity that you could have been building if you were a homeowner now versus waiting for that money. And it's also you can also look at it another way. By waiting and saving up that money for down, in 3.75 years, that property will be probably costing $75,000 more, which means your monthly mortgage payment goes up. So it's a tool to help you build financial security today if it makes sense. And again, it's available to all the employees of County of Lake. So you may be asking, how do our employees access it? Well, they do need to be working with a GSFA participating lender. And we have over 200 lenders approved to offer the program. They do not have to have branches located in Lake County. A lot of mortgage companies do work electronically, and they can, as long as you're working with an approved lender, one of our participating lenders, you have access to the program. We rely on our lenders to take and process the mortgage loan applications. We actually delegate the underwriting or the qualifying to the lenders. So they're going to go through the steps to collect documentation from the employee and make sure that they're in a position to qualify for that mortgage loan. Our client relations team, however, is available from 8 to 5, Monday through Friday, to answer questions and to help out with getting you in contact with a participating lender if you want to get started. We also have the toll-free phone number, 855-740-8422, and you can visit our website for a lot of additional resources about the program. You can look up the income limits. We have additional educational videos and content on the website to give people an understanding of home ownership and yet get them prepared to be able to afford a mortgage as well. And with that, I want to thank you all for having me give this presentation. For the employees of Lake County today, I want to open up the floor to some individual questions if you have any.
Thank you, Carolyn. We appreciate that presentation. And one of my biggest motivations to bring this here was, the thought of another opportunity for employees. We already have a problem with retaining and recruiting employees, and so programs like this are going to help us with people wanting to be vested in the community, having the opportunity to purchase a home. A lot of homes in Lake County are, some at some of the times they're not even resided in, and so with opportunities like this may be potential for us to have homeowners and homes that could make the community better, more responsible homeowners and employees that feel vested in their community and feel better about their lives and the equity that they can possibly build. So thank you again. I don't know if anyone else has any questions. Supervisor Sabatier?
Yeah, thanks for bringing this to the agenda. I think that any kind of perk that we can offer to our employees, as you stated, creates a good incentive to invest in the community and stay within the community. I do have a couple of questions. One is PMI. I know that if you don't put down 20% of a down payment, you have to pay the extra PMI. Is that something that they're able to escape from through this program, or is PMI just an automatic if you don't hit that 20% down payment?
Great question, thank you. So private mortgage insurance is a tool to offer high, what they call loan-to-value mortgage loans that don't require a traditional 20% down. So with conventional financing, we utilize a loan from Freddie Mac, a conventional loan called HFA Advantage, and it only requires 3% down. With that, it's a 97% loan to value. It does require mortgage insurance. That mortgage insurance is a monthly payment. It's calculated by a number of factors: the property location, the borrower's credit, income, a few different factors. But for borrowers who are at 80% and below AMI, so area median income 80% and below, so in a lower income bracket, our programs do allow for lower mortgage insurance requirements. So yes, the short answer is you will have mortgage insurance with any kind of mortgage loan, even FHA does mortgage insurance, that has a high loan to value. You're not putting 20% down. But we have structured this in a way to make it they're not getting additional fees over going out and getting a standard product that has MI or an FHA loan outside of this program that has mortgage insurance. And in some cases, we're actually able to offer lower mortgage insurance requirements and cost for the lower income borrowers.
Okay, I appreciate the response. And the reason I ask is because I know over the course of 30 years and paying monthly payments into a PMI, it adds up throughout the entire loan process. Just wanted to at least speak to that and hope that that conversation can continue when you're speaking directly to our employees so that they're aware, just because I don't think everybody's going to be coming in with $0 and getting the 3.5% loan from Golden State. They're going to probably have something else that they're going to be bringing to the table, and if they can get themselves to that 20%, it saves so much in the long run. Not everybody's going to be able to do it, but those who may not know may not realize that they're spending that much more throughout the term of their loan than they have to. My second question is, you said this is not for first-time buyers, meaning that if you already own a home and you're moving into a new home, that you can go ahead and utilize that. Can it be mixed in with a new home buyer's loan as well? Because I know that could be up to $40,000, and that can also help with some of those down payments. Just kind of curious if it can be combined.
Thank you. So I do want to clarify, we don't have a first-time home buyer requirement, but it's a great program for first-time home buyers. It just means we don't have a requirement that you must be a first-time home buyer. And as far as combining it with other programs or your own cash resources, we can do that. To your point previously, if someone has some cash saved up to put towards down payment, absolutely, we welcome that. But you can also still access the additional 3.5 for more assistance. So the more you're able to put down on the mortgage loan, of course, it will lower the requirement for mortgage insurance. But you can combine our Assist-to-Own program or the County of Lakes Assist-to-Own program with other programs as long as they meet the guidelines. So sometimes there's programs out there, I'm not sure which one you're referring to, which provide like an additional grant for a first-time home buyer. And it's a separate piece or a grant piece that can be combined with a mortgage loan, in which case we would be providing the mortgage loan, possibly the down payment assistance, 3.5% piece, and they could combine it with this grant from an outside organization or nonprofit as well. The caveat is that sometimes programs require that they set the mortgage interest rate on the first mortgage. And sometimes their assistance has to be in a certain position of payoff, for example. And so there are some factors when we look at combining with other programs that we may have to meet to determine whether they can combine a program. The best resource to figure this out is that participating lender. The borrower can get in touch with one of our participating lenders to ask about the assist-to-own program and what other programs are available to purchasers in and around Lake County. Then the lender can look at those guidelines of those programs and establish whether they can both be combined.
Appreciate the answer. Thank you so much.
Any other questions from the board? Supervisor Tues?
The question I have is workshops. I know you talked about, do we have any scheduled coming up, since this presentation? So that would be
At 12?
there's something already scheduled?
Yes, I just don't have the date in front of me.
Okay.
Maybe Carolyn has it.
I thought it said
It's on,
August 11th at noon.
I see Pam came on.
yes, it's August 11th at noon. And there's actually a web page, a resource page for Lake County that we can probably put up. I can probably type it in the chat screen and provide it to all of you, where it actually provides a link to sign up for that webinar.
Okay. I see Pam, you came on?
Yes, I was just going to confirm that we do have it scheduled for the 11th at noon.
Okay, thank you.
And that was part of the strategy that I had was to have this presentation, since we had somewhat of a open schedule and the timed items, and have this discussed. I know a lot of employees tune in to the Board of Supervisors meeting to give an overlay, and then they can have some more, I guess, intimate questions, and when they can delve further into the program on Thursday. So that was my strategy on that. So hopefully it works out for some folks. If not, at least we tried and did what we could. So thank you, Carolyn, again, and I'll open it up for public input if there's anybody that has a question or comments on this item. Not seeing anyone in the chambers or in Zoom, so I'll bring it back to the board, and if there's nothing else, Carolyn, thank you again for conducting this presentation for us. Appreciate the work that we do together, and look forward to seeing you in the next Golden State Finance meeting.
Thank you.
All right.